Sure. So now we're at 10:30 UK time here. I'd like to welcome everyone to the call. Thank you so much for joining. I can see in the chat we've got people from all over Europe. So today on the call you have myself and Sebastien Stanley-Jones. And we have Tori as well from our marketing team who'll just be helping run the call. Tori, if you'd like to move to the next slide, perfect. Sebastien and I are going to give an introduction to ourselves each, and then we'll be running through an agenda, so covering basically the European economy and M&A, and talking a bit about Flippa, of course. And there'll be a chance for you to ask any questions at the end, and Sebastien and I will be happy to answer. So Sebastien, I'll let you introduce yourself first, and then I'll introduce myself.
All right, very good. So very quickly, my name is Sebastien, as Daisy said. I've got about 10 years experience in M&A. I help here in the EMEA office running strategic advisory for some of the larger 6, 7, and 8-figure deals. My background is predominantly in more traditional finance. So prior to this, I was the managing director of a boutique investment bank based out of New York. I was head of corporate development for 2 private equity funds that oversaw roughly $400 million in liquidity. Prior to that, I helped build out the enterprise function for a large fintech unicorn called Clearco. And then, obviously cut my teeth back in the day at a hedge fund in the UK in London. So I know a little bit about the whole stack. Obviously, I've underwritten e-commerce brands, I've bought and sold, I've operated brands, and ultimately helped buy and sell brands. So more on the transactional side of things, but obviously happy to answer questions related to anything to do with M&A. I am Canadian, as the accent might give away. So a lot of my experience does reside in North America, but obviously been here in the Netherlands for about 4 years. Daisy, take it away.
Brilliant, thank you. So like Sebastien, I'm an M&A advisor at Flippa, brokering deals from end to end. I'm based in London, covering the EMEA market in terms of sellers, but buyers can be located anywhere, so work globally with buyers. I've also got 10 years in the finance industry, and I've been at Flippa since January last year. Prior to that, I was working at Goldman Sachs in the private wealth management division. So I had a change of area of finance that I was in, but been in the finance world based in London for over a decade now. So I think now we can move on to the agenda. This is what we'll be covering today. Before we start though, Sebastien and I wanted to check who's a buyer and who's a seller on the call, or who's both potentially. If you want to drop something in the chat, that would be great. It just helps us perhaps direct the conversation. So I can see we've got buyer, seller, valuator. Okay, brilliant. There's certainly
It's an even split, it seems.
I was going to say, it seems like an even split from people who've come into the chat. Great.
Normally we would try to cater the conversation towards one or the other if one was the majority, but granted that none are the majority, we'll try to keep it very broad. But honestly, to everyone that is engaged, please feel free to ask questions in the type form. It will be very helpful. We want this to be interactive. We don't want to talk at you guys. We want you guys to use this as to gather as much information as necessary. So of course you can, if you feel shy or you'd like to move to a more personal setting or a more private setting, just ping us after the fact. But by all means, the more engagement, the better. It will likely make this a much more interesting and hopefully better takeaways.
Yeah, absolutely. I echo that. And at the end, there will be a QR code shared for each, myself and Sebastien, where you can actually book a meeting with us directly, as it'll take you to our calendar links. So worth mentioning that at this point as well. So I'm going to kick off by talking about what we're seeing in the market at the moment in terms of M&A. So here we're just talking about how there is a resurgence in M&A activity. M&A activity is accelerating. And along with that, the average transaction value is increasing. We see this globally, but being Europe specific, we do especially see it here. However, valuations have tightened since 2001. Obviously, there was a boom there, especially in like the online business space, e-com, used to hear about all these high multiples. They have come down, but the market is booming at the moment. It's certainly accelerating and getting there after we saw a bit of a dip. I'd say demand at the moment is focused on simple businesses that are lean and profitable and defensible. And that's something that's important to mention. Um, so
But before you go to the next slide, do you want me just
yeah,
to quickly add a bit of flavor as well?
yeah, sure, please do.
So I think it's important to note that we saw multiple expansion from 2018 to about 2021 slash 2022 in the e-commerce space, and then multiple compression pretty aggressively. Obviously, as rates rose and as a lot of the sort of the shine came off the aggregator model. Now we are seeing a lot of that stuff come back actually. So e-commerce is starting to rise again. We're seeing some multiple expansion again, but we're coming off pretty big, pretty bad lows, or I would say record lows. So yes, there's definitely optimism back in the space. E-commerce is starting to gain some valuation back. But for every gain we see in e-commerce, we are seeing a bit of a multiple compression in SaaS. SaaS is, the sort of historical Constellation software model is proving to be a little bit more challenging. Obviously, with the induction of AI, there is this sort of build rather than buy argument between a lot of these enterprise organizations. So a lot of the larger, more sophisticated roll-up or PE plays that focused on SaaS are starting to maybe rethink a little bit of what that valuation might look like. So we're seeing things compress from maybe all-time highs in 2022 for sure. But yeah, I just also would note, and I'll touch on this a little bit more in the next slides, but we are seeing a bit of a Trump trade in the sense that there's a lot of American liquidity that is looking for interesting European domiciled assets. It provides natural diversification against a lot of the volatility in the US, and they see Europe as safe shores. So there's just definitely a lot more activity in the space. We've seen transaction volume go up dramatically from where we were, maybe, I'd say 2 years ago. And now the question is just, as things start to settle out, what does the sort of the next 5 years look like?
Yeah. Thank you, Sebastien. So I think that takes us then to cover WePlow, which was a deal that you successfully executed very recently. So if you'd like to talk everyone through this, and then I'm going to run through another deal that was executed last year that called Typing Test. So I'll hand over to you again, Sebastien, to go through WePlow.
Thank you. Yeah, just really quickly, this is an interesting anecdotal transaction that was just very recent. Great business. So to Daisy's point, buyers are looking for simple, cash flow positive, healthy margins, great, growing year over year, strong CAGR. This one kind of encompassed all of those things, but really interesting that we had a very competitive process. So multiple buyers interested, right up until the last moment. Basically, this did go for a good, healthy multiple. I wouldn't say this is reaching anything close to the highs of 2021 or even 2020, but definitely we're seeing the valuations come back into the space, which is great. I wouldn't say this is indicative of all transactions, but this is definitely something that we're starting to see form a trend. So if you're in the health and wellness space, skincare, pets, baby, household within e-commerce, these tend to still be very resilient, strong sectors that are still commanding relatively good multiples. And again, if you're able to show the growth and the cash flow, then you can also demand something as far as maybe 90% cash at closing. This was 95% cash at closing, which for those that are not familiar, is quite rare in the e-commerce space. We typically like to see buyers typically like to see sellers remain motivated and obligated to the asset post acquisition. So usually earnout or milestone payments or stability payments or some form of deferred is usually included. And this one was a little bit counter to that. So it's really great to see this type of deal is what we are hoping for. And yeah, we just wanted to highlight, hey, there are some green shoots in the space, and we're seeing a lot of positivity come back into the space.
Thank you. Yeah, exactly. I agree with that, that we're seeing a lot of positivity come back. And as mentioned before, like the average transaction value is increasing. So here's an example of a deal that was done on Flippa for $2.5 million. And it was the CEO of Sporkle that bought this business. So he's based in the US, and the company Typing Test is the seller is based in Finland. So this is a prime example of one of the cross-border deals that Flippa has done, and it represents actually 67% of our deals which are done cross-border. So going back to what I said earlier about, although Sebastien and I focus on sellers that are based in EMEA, our buyers are based globally everywhere. So we have super far reach. Also, I wanted to ask actually, has anyone used Vocal before? Because I had when I was at school, and I find it really interesting that, seeing these sort of companies coming in and doing a strategic acquisition, and that touches on, the sort of buyers that we have on the platform, which we'll go into a little bit later. But this I wanted to highlight here whilst we're on the slide is an example of a strategic acquisition. Moving on, Sebastian's now going to talk about regulatory and geopolitical dynamics.
Cool. This is pretty dry, but I'll try to make it as interesting as I possibly can. I think the first point to note is that in what we would define micro M&A, so deal flow sort of below the 50 million mark, I would argue is the micro space. Obviously, geopolitical considerations and regulatory constraints are less, right? This is a pretty fluid market, but it is important to note that antitrust is targeting serial acquirers. We are seeing a lot of softness in the aggregator space and in the roll-up space. The traditional PE playbook is starting to shift. I wouldn't say that it's exhausted, but there's just not as much easy money left. And so, I would argue as the market is maturing and the digital space is becoming more of the sort of the standard, we are seeing places like the EU start to regulate more heavily. We are seeing more observation over cross-border complexity, right? So as it becomes quite normal for European businesses to sell to the US, there are some constraints on things like SBA financing. Some lenders are starting to ask more questions. They are starting to look at, okay, if you're domiciled in Europe and your buyer is in the US, like how does that affect underwriting long term? Yes, you'll receive the presentation afterwards. No worries. Now, again, I just want to really quickly say that capital inflows and investor shifts, like I think I mentioned this previously, we are seeing a bit of a Trump trade, or we are seeing a bit of a push away from the US. And we also are seeing a lot of activity in the Middle East. The UAE, the Kingdom are making big plays, starting to get their foot in the door and trying to build cornerstone investments in Europe. So quite an interesting regulatory situation. But again, just want to comment, we're seeing things tighten. We are seeing, export controls and sanctions and things of that nature start to take effect and start to bite, definitely on the larger deals and flowing down. So there's more of a knock-on effect within the smaller deal space, but definitely something to keep in mind. Obviously, the conflict in Ukraine means that there are certain buyers in the Far East that are less able to be serviced. The KYC, KYB is definitely more of a mandatory requirement, whereas traditionally perhaps it wasn't. These are definitely things you want to know about. You definitely want to know about GDPR, all the sort of different regulatory compliance issues that come up. At a larger M&A trend are coming down now to the lower as well. So I would argue that sort of takeaway of this, or the summary, is we're seeing a lot more regulatory scrutiny. We're seeing obviously more concern around tariffs. We're seeing governments in a weird way get more involved, and that is starting, and it's trickling down even to what we would normally have thought were kind of immune to this, which are the smaller deals. Even $1 million deal can still have a lot of these concerns, and definitely if you're using debt as a buyer, your debt provider may have a lot more questions, and the KYC, KYB, AML considerations are pretty high, and anything cross-border will also, the requirements will go up exponentially. So just something to consider. I think it's interesting because obviously Flippa, this is our specialty. We understand how to navigate the complexity of cross-border deal flow, and we're able to advise and help just make the process much faster and simpler. But definitely worth noting, if you're selling your business and you're looking at US buyers or US liquidity, just be prepared that maybe the regulatory requirement or burden might be higher than, let's say, 2 years ago, even in the light of the current administration in the US that is trying to be less government. We are still seeing a big impact. Next slide, please. Again, I think this is just a really quick note on just how much of our deals are cross-border. I don't want to say that we only do cross-border, but again, there's so much disconnection and dislocation in price. There's real opportunity for buyers in one country to purchase assets in another. Obviously, there are some FX considerations, but generally, I think buyers are starting to see real value in places that perhaps they would not have decided to look. I mean, there's some real talent in Eastern Europe, Poland, Ukraine, Hungary, Romania. We're seeing deals come out of Romania, fantastic, and just a lot of buyers saying, "Hey, maybe I should be looking for up and coming economies that produce incredible talent, and perhaps the price is a little bit less, or maybe more of a deal than, say, the traditional North American multiples." Daisy, do you want to comment on something?
Yeah, I was going to comment. I've seen that someone's asked about the typical profile of buyers on Flippa. So I just wanted to cover off that, and thank you for the question. We have a wide range of buyers, and I think that's one of the strengths about Flippa. It's not specific in the types of buyers that we attract and that we deal with. For the online business space as well, there's so many different types of buyers. It's very open as well. So we have the individual operators and we have lots of first-time acquirers, but we also have serial acquirers as well who might be individuals. So they are very active in buying, side hustles or replacing jobs or having like a investment portfolio for themselves as such in the online business space. We also have, PE funds and aggregators. So these might be more, firms that are acquiring businesses or on behalf of investors as well. So we see a lot of that. And then, as I mentioned earlier, there are strategic buyers. So that was an example where Typing Test was bought by a strategic. And lots of them just want, bolt-on assets. They might want to buy up similar businesses to get the traffic, to get the customers and so forth. Focused around niche audiences, SEO authority, or unique tech that they perhaps want to own. Hopefully that answers your question, but if you have anything further, let me know. Oh, how should a buyer, aggregator, or peer interact with sellers or Flipper on individual deals best? So with regards to individual deals, if you're referring to like a specific business and there's a seller there's a broker representing the seller, so like myself, Sebastien, we will work with you in order to guide you through the process as well. So although we go out and we list businesses for sellers, we do work with buyers, just not actively on mandates. So we'll take the criteria down and we'll kind of do a matchmaking process. Whereas with sellers, we're more focused kind of on sell side and bringing assets onto the platform and then matching them with buyers. So I make sure that I have, regular conversations with my buyers and understanding their mandates and getting updates so I can send them over relevant deal flow. So in terms of dealing with buyers, it's if you want to have a call with me or Sebastien, you can book one using our code at the end and we can take down your acquisition criteria, and that's how we would interact. But if there's a specific deal that you want to look at, we would use the platform to talk on the deal room for that specific deal about the listing itself. Hopefully that answers that
So
question.
that was great. That was well said. I just want to add a little bit to the typical profile of buyers. Look, we have 2 million plus active buyers. On the full spectrum. Some funds verified, some ID verified, some not. We really do try to hug the world. We are the largest marketplace for M&A activity globally, and so that global reach allows us kind of to touch on everyone. I think it's important to note that strategic acquirers, by definition, are not professionals, right? They're usually firms that are looking for some alpha or looking for, like Daisy mentioned, technical expertise, or looking to grow via acquisition, but they don't do it on a daily basis. That their job is not to acquire. Their job is to run whatever business they have, and so they typically are very few and far between, right? Like they get involved when they see something interesting. They're sort of evergreen. They're constantly looking in the market, but they're not like a PE fund that has capital they must deploy and is looking to they're basically very financially driven. Strategics tend to be much more, okay, does this make sense? And they come to the market, I would say very infrequently. And look, we try to cater to every buyer. We try to utilize a lot of machine learning and automation to allow buyers to be connected with only the most relevant assets based on their criteria, based on their mandates. That being said, we're really flexible. We try to, like Davey mentioned, she has personal relationships with buyers. We do try to nurture relationships with people in this community, especially in Amsterdam, in London, in Berlin, and Paris. But yeah, look, the profiles are as wide as they could be. We are also, I'll just touch on this really quickly. We are considering or investigating the option of allowing people to do investments via our Flippa Invest program, which is run by Laritz. And now that is for U.S. incorporated companies only, but we do offer the Delaware Flip for those that are looking perhaps to fundraise rather than sell. And obviously that opens up a whole other segment of potential buyers in the market who maybe traditionally look at businesses from an investment perspective and not from an acquisition perspective. Tori, we've lost you. Do you mind putting it back onto the deck? I'll really quickly mention, Marco, if the seller is a US-based nonprofit, does that complicate things or simplify them, or is it irrelevant? I think charitable status definitely makes things more complicated, but is that nonprofit moniker, is that a way, obviously, like, does that change their taxation scheme? If that does, and it changes profitability, I think that's more of an underwriting question or valuation question. I don't think it complicates things from the perspective of an acquisition, but we'll take that offline. That's probably a more complicated, nuanced answer. I don't think it's irrelevant. It's definitely not, but I'm not sure if it would be a positive or a negative. I think it's more relevant to the buyer and what they're looking to achieve. All right. Huge shift in investment banking. So real quick here, I think what we wanted to talk about was just the way that traditional M&A and traditional investment banking has been quite limited, right? It's basically, if you weren't a $50 million a year company or $100 million a year company, the lower middle market or micro market was basically, it's no man's land. Really, nobody is addressing M&A investment banking for the 99%. And we just want to make sure that everyone understands that Flippa is a solution that helps provide liquidity for everyone else outside of the bulge bracket large investment banking model. And yeah, I think it's important that we really have to talk about that. Large cap focus, European banks. Yeah, again, we're just talking about where there's a lot of gaps in the market. Most deals take 6 to 12 months. I mean, arguably, I'd say in the middle market, you're looking at actually 1 to 2 years. Institutional buyers operate in closed networks, absolutely. So we try to make everything transparent. We try to include all buyers, but this is traditionally quite a closed off ecosystem. The more sophisticated buyers that we have on the platform, they do engage with Flippa quite frequently, but maybe not to the same degree that Goldman Sachs or JP Morgan or whomever. But definitely, we're able to tap into even the largest of the buyer network. If you don't mind, go to the next slide. All right. Again, Flippa solution. We're just basically pointing out the obvious. So our sweet spot for broker deals. So to have someone like myself or Daisy actually support the transaction. Usually, we want to see it around the 100K mark. If I'm being completely honest, I think we drive the most value at sort of the 500 or I should say 300K mark. I say 300 to or 100K to 300K. We can definitely provide a ton of value. But at that level, there's a lot more heavy lifting I think that the founders can do. But absolutely anything over the 300K mark, having a designated broker really does help you kind of cut through the noise. It's a white glove service. Will help you understand how to run a process. Will help you understand and navigate the conversations with buyers. We have that virtual deal room. We can set up the data room. We have all the components to complete a transaction safely. And I think that's just really critical because a lot of the more traditional investment banking models, they don't offer a full turnkey solution. They're more about brokering introductions, if I'm being completely honest. And obviously, because we are digital first and digitally native, the actual exits are much faster. The process is expedited. We're able to use API calls to verify information on QuickBooks, FreshBooks, Xero, Shopify, Amazon, and we can cross-reference that and reconcile that against P&Ls that are uploaded. So buyers can know with absolute certainty, hey, this business's revenue is what it is. They have to put less into due diligence because they know, hey, with this immutable data I'm able to make assumptions very, very quickly and safely. And obviously, open marketplace access, just, we allow everybody all over the world to engage. Obviously, we have protections in place for both buyers and sellers, and we are policing all transactions. But we do encourage people from all over Singapore, Australia, all through APAC, LATAM, everywhere. And just having that global reach just means that you generate a ton more demand, and usually that expedites the entire process. So again, in summary, what would take usually a year, maybe even 2 years in the traditional M&A or investment banking space, we can do in as little as 3 months. I would argue most deals are done in the sort of 8 to 12 month mark, but it all depends on the seller's timeline, how prepared they are to go to market, if they've got all their financials ready, they've filed their tax returns, if they have a balance sheet, all of those things. And of course, if anyone wants to have a conversation after the fact about what you need to do in order to prepare to exit, we can absolutely do that. Daisy's an expert in that.
Perfect, thank you. I'm going to run through some trends now. So looking at this slide, it's just covering a few of the asset types that fall within the online business space. I wanted to add to that lean SaaS tools, so things like AI plugins, workflow automation is very hot at the moment, and there's certainly buyers actively looking in the market for those sorts of things. I'd say with regards to e-commerce, very niche kind of brands are wanted. So things that are niche products, where there's a loyal community, also buyers really value that as well. Perhaps they have a similar business and they want to buy one for cross-selling purposes, and to have an already, actively engaged audience. That's really popular as well. And something that I'm seeing more and more is wanting to have a subscription element to an e-commerce business. So I'm working on a deal at the moment that's in the supplement space. And there's 60% of the customers or thereabouts are repeat purchasers, because it's a subscription where it's really sticky because they want to then keep buying the product and so forth. So something like that as well is obviously very appealing to buyers. And of course, within SaaS, you have those sticky customers as well, hopefully with a low churn, and it's this subscription model there as well. Content businesses, they can be diversified, I think, at the moment with like monetization. So looking at maybe ads and affiliates and email lists and so forth. And then there's also marketplaces, newsletters, mobile apps are very popular as well, and actually growing, I'd say. And of course, I touched on SaaS as well. Perfect. If we could move to the next slide, and I'll just show you actually then what is selling on Flippa. So these are stats, I believe, from over the last 12 months. So you can see that what I mentioned about, the tools and plugins, that's up 200% over the last 12 months. You can see it's a very, very popular asset class. We then have YouTube and content, which is up 31% year on year. We actually have a YouTube specialist at Flippa. So there's a couple of guys who manage all YouTube deals. So if that is something that you're interested in, feel free to ping a note to Sebastien or I, and we can do an introduction for you to the YouTube specialist. And he can kind of, have you then as a buyer or a seller on his books. SaaS continues to be popular and is up 27%. Apps, as I said, that's growing more and becoming more and more popular. We're still up 3%. And then e-commerce is fairly steady, but growing at 1.4%. Then
Daisy,
looking at
just
sure.
really quickly, I just saw that Cyril had a comment on compliance, and I
Oh,
just think it's just relevant to maybe note.
yeah, sure. Go ahead.
Cyril, we obviously do everything in our power to ensure that sellers are who they say they are, right? So the KYC, the KYB components are there. Using immutable data and the APIs, we demand that people log in, so they have admin access. Again, we're constantly policing, anything where someone's doing something with a nefarious intent. It's relatively easy for us to actually flag. But I see I can understand your concern with the smaller businesses. Again, smaller business transactions tend to be more automated. So at the larger scale, we are connecting with the sellers. We are speaking with them. There's a bit more of a human touch, and I would argue that helps to mitigate some of the concerns around fraud or anything like that. But I understand your concern. Again, we do everything in our power to verify. We do everything in our power with the API calls, with uploading admin access to make sure that people are who they say they are and they do have the right to sell that business. Again, so incorporation in good standing, taxation, all of that. But again, some things occasionally do slip through, but we are proficient in catching the 99.9%.
Yeah, we have a marketplace and integrity team, and they like monitor everything and flag things and so forth. And it's the nature of a marketplace, right? And that's why we have the integrity team there in place to do as best job as possible in terms of from a compliance perspective. So, what is selling on Flippa? Now, this chart you see is actually from our data insights page. You have access to this along with lots of other data that tracks multiples over the first 6 months of the year and the second 6 months of the year. So you can see previous ones per asset class. And then you can also see things like this. So what, terms have been searched by users on Flippa. You just need to have a Flippa account in order to access all of this information. So here you can see that Shopify is obviously clearly the most popular term searched, and you'll see all of the others down there. As I mentioned, YouTube is a very popular and growing, asset class there. It was second in terms of growth on the slide before, and it's second there in terms of the most frequently searched term. So yeah, if you don't already have a Flippa account, what we will also show you at the end is another QR code, which will give you access to 3 months a premium user. So you can use that in order to get 3 months premium access, which just means that you can see listings. I think it's 3 weeks, 21 days ahead of other buyers if you're a buyer. Moving on.
Daisy, do you want to make comments? So Liam mentioned, does Flippa provide the tools to help calculate the value of these SaaS AI businesses? The short answer is absolutely. I appreciate that. Yes, there can be value in intangible and goodwill, but we will help you understand or wrap it up into an enterprise value and give a clean number. But look, there are some pretty core metrics that we value SaaS businesses on, and like net revenue retention, CAC to LTV. A lot of these things are quite binary and easy to measure. So yes, goodwill, intangibles are something that we consider. But candidly, at these sizes, we do need to look at the hard facts. And usually most businesses have those. And again, the great thing about a SaaS business is all that data is immutable, right? So there's not a whole lot of gray to consider. And then Moritz had a question. I think Daisy, best
Can
suited
I
for you.
just add to that, Sebastian? I wanted to add about Liam's question about the evaluation of SaaS. And just more broadly, is often what I hear from sellers is, okay, this is my financials for the last 12 months, which is what we specifically look at, and that ties in massively to the valuation as we're looking at profit multiples when we're looking to exit a business. If people are looking to raise funds, the valuation is done differently. So that would also be looking at future potential and growth. Of course, that is considered in an exit valuation, but nowhere near as heavily so as if it's for raising funds. So I think it's really important to mention that, as often sellers will come to me and say, oh, but I was valued at this multiple when I was raising. Like, yes, but exit multiples are different, and they are lower because the buyers are looking at what the company has achieved so far. So I think that's very important to highlight. And then Sebastian, sorry, said someone else has a question. Moritz.
Moritz, sorry.
Yeah.
Yeah, that was an interesting one and relevant to you as well.
Um, are these YouTube agencies, ad agencies, or selling YouTube channels? So we do sell agencies on Flippa. I have a couple of listings at the moment. One is a content creation agency, and another one is in software development, kind of blockchain focused and so forth. In terms of YouTube specifically, we can sell agencies. So yes, I'm not currently managing any YouTube agency listings, but that will be something perhaps Sebastian or myself would manage, as it's an agency. For YouTube channels, that's what the YouTube team is primarily focused on. So it will be channel specific. And there are a range of values as well. They can go from 5 figures, even up to 7 figures. Does that cover
I
off
like you.
that question,
I think
Sebastian?
I think that does.
Yeah.
Julian, how does it look like for podcasts? Podcasts is definitely a very nascent category that we are exploring. Um, Currently, I don't think there's a lot of social proof of what podcasts are selling for. So unfortunately, I don't think we can answer that with much accuracy. Happy to take it offline though. Obviously, again, based on the sponsorship revenue, based on the viewership, we can definitely make an assumption on valuation and hopefully try to guide you in the right direction.
Yeah, I see. Sorry, we've got lots of questions flowing in, which is great. So Gianluca asked if there's a community forum or a group basically where you can network and join forces. So I'd say that that is what the platform is actually for. So you can, if you're seriously considering about selling a business, you of course then list it and then you can talk with buyers. If there's a broker like myself or Sebastian, we're then also experts in executing these deals, and we will be there to be guiding the whole transaction and brokering it from end to end. So I'd say that's where you can learn if you're, have serious intent. In terms of there being, a separate forum, Flippa doesn't have something like that as such yet. But I mean, watch this space. One thing I would say about Flippa that I've really been amazed at since working here is how quickly we can execute things if they are in demand. We can make things happen. No is exceptionally rarely the answer, and if it is, it does mean no. Usually it's yes, let's see what we can do and make that happen. And that's why I think it's an amazing place to get deals done and done quickly.
What
So also
One
I'd
thing
like
as
to
well, Mark. Oh, go ahead. Sorry,
I was
apologies.
going to say, I know that David, you've asked quite a lot of questions. We can take this offline. I think that Tori wrote back to you, but we can take this offline and we'd be happy to have a meeting with you afterwards to discuss your specific questions about your portfolio. Um,
I
Sebastian,
was going to quickly mention Marco's question. So yeah, look, I think I've seen as well a couple of questions on business evaluation, or I'm assuming valuation. Look, the valuations, we do have a tool, so you can absolutely go to Flippa and take a look at what your business is worth. That tool is basically aggregating as much information about your business as possible, and then cross-referencing that against our database of successful exits to give at least a sense directionally what your business is worth. It is by no means 100% accurate. It is a good bellwether, but it is not taking into account the nuance of a business, or perhaps you're a really heavy growing sector, or any sort of I would say discounts or premiums that need to be applied. And also, the most important thing here is the fact that every business will be valued differently. And I hate to be that person, but the business valuation will be what the market is willing to pay. The best way to know what that is to run a process and to get into the market.
like Sebastian said, I will agree with at the end of the day, a business is worth what buyers are willing to pay for it. And that's why we have to go to market and see what the feedback is from buyers. Also wanted to kind of add that there are metrics that are considered for each different asset class. And when I keep saying that term, I'm referring to different types of businesses within the online business space. So, mobile apps, content sites, SaaS, e-com, so forth. There are different metrics that we do look at. We're not running over that specifically in the call today, and I'm just conscious of time because it'd be quite a lot to run through. But if you wanted to, speak more about that, feel free to book a meeting. If there's a specific sort of asset that you have and you're thinking about selling, then we can run over what those metrics are so you can make sure that you would have all of that prepared. And actually, we will cover what to prepare for a sale later on in the deck. I'm just going to go back to the presentation so we can keep running through and then we can dip back into questions if that's okay. So looking here, we're going to talk a little bit about what the kind of investor appetite is, distribution shift and so forth. So I think we've kind of covered off quite a bit of this already. I'll just leave the slide there for people to read through a bit. And Sebastian, do you have any additional points to add?
No, I just think I do think that the headline here is really what the primary takeaway is, which is, we're in, you could call it Web 2.0, and now we're in the agentic era, right? So agents, AI, and automation, but we are sort of hitting a pretty serious inflection point within the internet economy. So that being, or that kind of centering around the idea that anybody can start a business anywhere. There are no more limitations to starting a business. I would argue that we're in sort of a Precambrian explosion of new business and SMBs because of AI, because of automation. What would have taken normally $2 million of investment, you can now do with $20,000 of investment. So yes, we're at a very interesting point within the sort of, I would say, digitally native asset class. There's a ton happening. We're seeing more and more individuals take ownership of their own future, whether that be monetizing Substacks or whatever the case is. But yes, we are seeing a lot more activity. We are seeing with the introduction of Lovable, we're seeing so many people take ownership of bringing something to market. And we do envision that the M&A space in this micro cohort is going to rise exponentially, and we are going to see a lot more demand from buyers looking for interesting assets that someone built on Lovable within the weekend. So I just think that the headline here is really important. We're at a very interesting point. I know there's a lot of negative chatter in the news around AI taking everyone's jobs. Yes, that could be true, but we definitely know that AI is allowing or empowering anyone to take ownership of bringing a business to market or an idea into life. So I think it's an interesting point.
Great, thank you.
Tori?
So talking about the future of deal execution. So I think that AI tools are very important in terms of analyzing the financials there. I don't know whether you actually already mentioned or not, but Flippa also leverages AI. We have an AI tool that's a matching system integrated into the platform, where listings are matched to buyers. So if you're a buyer, it's really important to fill out all of your acquisition criteria upon joining. If you already have an account, I'd go back and review that, because that's the way you get matched to deals that are suitable. So keep updating that as your acquisition criteria changes. Sebastien, did you want to talk further to this?
No, I think it's pretty clear, guys. Of
Okay.
course, if anyone wants to talk a bit more about how to make deals go faster, they want to talk a bit more about compliance, or they want to talk about some of the checks and balances in place for making sure that a deal is done safely. I think one point that is worth noting is that this industry has been traditionally very relationship driven, and there hasn't been as much focus on tools. If you're working with an investment bank, typically that investment bank keeps the seller a little bit in the dark as to how things are operating. They're running all the meetings, and they just inform you when an offer comes in. Whereas with Flippa, everything is visible and transparent. As the seller, you understand start to finish what is happening. We try to coach you and empower you so that once you're done your first transaction, you're actually able and capable of doing one on your own without even having to necessarily use a broker. Obviously, still using our platform, but not using a broker. And I would just say this is starting to accelerate, right? So the digitization of M&A, the ability to keep everything transparent and on platform, just allows anybody to do this and to learn. And this is no longer, sort of a closed door community. We are very much doing everything in the light, and we want you guys to feel involved and to learn as you go.
And in a couple of slides time, we'll get onto that. And there's actually a chart that shows you about all of the integrations that we do have on the platform that take you through the process. That is a stark contrast to how it would work with a traditional M&A broker or an investment bank. So you can actually see exactly what all those integrations are. But yeah, we want to move on to how we get deals done. So before we see that chart, we just wanted to talk about actually what happens before you start a sale process. So if you are a seller, I can't reiterate enough how important it is to have your financials in order. So that means having a P&L broken down month by month for the last 12 months. So that is what we base the valuation on, primarily in terms of financials. So it's super, super important. If you don't already have a P&L and you need some help with that, we have a template that we're able to share with you. But I would strongly advise that your accountant looks at this and reviews it, and then we can go over it with you as well, just to make sure that we're obviously clear on it and that we have considered any add backs. If anyone isn't familiar with the term add back, that means something that might not actually be a necessary expense in running the business, so that we can add it back in to the bottom line. So that would therefore raise what the profit is for the purposes of the sale. Or often we see that, there might be overheads included that span multiple businesses. So we just need to segregate out what portion of that expense is actually for this business in particular, as often our sellers own multiple businesses, and so do buyers as well. It's actually registered on the platform how many businesses buyers own or sellers own when they sign up, and the average is 6. And I'm currently working with a seller who owns 15 brands, so 15 businesses, which again is quite impressive, and something I found surprising when I first came into this space. In terms of preparation as well, so covered, financials is really important. And also you'll need to, when we get to the due diligence stage with buyers, to tick and tie back that revenue figure that's shown on the P&L to bank statements to incoming funds. You also need to show, proof of expenses as well. And then contracts too. So contracts with suppliers, if you have those in place, any affiliate agreements, any contracts with advertising agencies and so forth, or employees and freelancers. So it's important to have that all ready. And all this information, by the way, we would put into a data room that can then be shared with buyers. I think I touched on earlier about metrics too. So just having metrics ready, because that's what buyers look at. So things like, CAC, which is the customer acquisition cost, or the AOV, the average order value, these sorts of things are the stats that buyers will be looking at. So, traffic trends and subscriber growth, email engagement, and so forth. Sebastien, do you have anything to add to that?
No, I think that's really comprehensive. That kind of covers everything. I think the only thing we would just add is as your broker, we're going to help you guys feel comfortable around this process, right? So, of course, there is some heavy lifting that we expect from founders in order to be prepared, but we're there, right? We're not going to leave you sort of flapping in the wind to figure this out on your own. You have, one-on-one support. If there's anything you feel uncomfortable sharing, we'll tell you if we believe it's normal or standard protocol. If we think it's not, or if we believe that you're oversharing certain details, we'll let you know, where our sort of obligation is to the integrity of our marketplace. So that means that we have an obligation to make sure that buyers are protected and sellers are protected, and everybody is able to transact in a safe and transparent manner. So as I said, this is you're not on your own. You're very much being coached, and there is, for lack of a better term, an adult in the room to make sure things are moving as they should.
So looking at the next slide, this just shows what we mentioned earlier about the integrations. So you see the AI buyer matching there and so forth as you go around the chart. This is everything that's actually integrated into the platform. So when you're on a chat on the platform with a buyer or seller, then you can see the bar at the top, which takes you through each of these. So you can actually buy insurance as well. So the deal would be insured, which is a market leading integration that we have and we've had in place for a few months now. So that can provide some reassurance if it's something that you do want to take out. We also have, legal document support, that we have an LOI, letter of intent, and an APA, asset purchase agreement, that were drawn up by M&A lawyers that you can use as a template if you would like. As the deals kind of get bigger and further up that value chain, usually, and if not, then we do suggest having an M&A lawyer in place to check that. As although Sebastien and I can guide through the process, we aren't qualified as lawyers as such. Yes, we've seen a lot of these agreements, but just having that legal person there is that ultimate reassurance that everything is, perfectly done in the agreement at the end of the day. Moving on to the next slide. This is just covering off, I think, what Sebastien mentioned earlier, just having brokers on the deal helps you achieve an optimal exit. You can see that we have lots of different, brokers across different regions there. So Sebastian's based in Amsterdam, like you mentioned. I'm in London. We have brokers in different countries within Europe as well to assist with our European sellers.
You might want to note it's just the different languages that we support. So we have representation, boots on the ground in France, in Spain, in Croatia, in Singapore, in the Philippines, the US,
Portugal.
Australia, Portugal, obviously the Netherlands, and the UK. We are,
Then
again, utilizing AI, so we can, in theory, support any language, but those are where there are physical human beings who can help guide the process
and native speakers as
and
well.
native speakers.
Yeah. So here, again, just showing the results that can be achieved by using the broker service. And we've done a large number of transactions as well as a company. The next slide is just, again, I think I covered that off earlier from one of the questions that someone asked in the chat. So about the buyers that we have, which is a huge range, and there's examples of some of the buyers in terms of companies that are actually on our platform as well. So yeah, looking at your experience on Flippa, again, just showcasing some of the kind of technological integrations that we have that help you achieve the best exit possible. So looking at, the documentation that we have in place, the verification of buyers and sellers, the vetting of them and so forth, and actually looking at P&Ls and going through those with the sellers. Yeah, I think that
I think that's it.
we've covered off that
Yeah.
as well.
We want to give you guys time back if anyone has questions. Obviously, there's been great
Yeah,
questions in the
exactly.
chat, but if anyone feels they want to, I'm not sure if we can unmic themselves or unmute themselves and speak, but you can definitely ask questions in the chat or you can just book a
Yeah.
call with us. That's fine.
And a couple of things here. So these are the QR codes to book a meeting directly with myself and Sebastien. And then also that's the code to get a free 3 months worth of premium access on Flippa. And I noticed that someone in the chat earlier asked about events. Flippa love hosting events, as we like to come and meet you in person as well, not just hosting webinars or speaking with specific buyers or sellers one-to-one. We're keen to get out there and meet as many of you as we can. So we actually have a big road show coming up in the US in September and within Europe in October. It's over 2 weeks, and we will be in Munich, Madrid, Manchester, Brussels, Amsterdam, Vienna, Milan, and Lisbon. And of course, I'm in London and Sebastian's in Amsterdam, so we can have face-to-face meetings in person in these cities as well. So just wanted to
Did you
highlight
cover off Dublin? Yeah, we'll be in
that.
Dublin as well.
Oh, apologies. Yeah, Dublin as well. And then Tori had dropped in the chat the link, but I'll drop it again there where you can just see all of our events. So that gets refreshed as and when new events are arranged, and you can register there. It's free to come to the events. I should also mention that. So if you register, you'll get the invitation and get the location and so forth, the calendar reminder. So if you could register, if you are planning on coming, that would be brilliant. Does Flipper
One thing
represent?
I just saw a question. Oh, I
Yeah.
was just gonna say that the Switzerland. No, we're not in Switzerland as of yet, but we would really like to run an event in Zurich at some point. We will
Yes.
try.
There's so many options. So if we know that there's demand there, it sounds like there could be from this chat, then that's brilliant. That's what we are planning to do. Wherever there is demand, we can go there, we can host the event and get the market moving. So yeah, Amsterdam, there is an Amsterdam event, I think.
No,
Sebastian.
he's correct. No, he's correct.
Okay.
It might not be mentioned there, but we will be running something ad hoc. But by all means, if anyone has questions on where there are events or things they'd like to attend, just ping us personally, and we'll take time to organize with you.
Yeah, absolutely. We have been in Berlin before, and there was one with Warsaw, but unfortunately that the date had to get changed for that. So watch this space. We should be hosting an event in Warsaw at some point in the coming months. In terms of Eastern Europe, we actually travel to Bucharest and Sofia every now and then. Both of us, Sebastian and I, have been in Bucharest this year, and a couple of we actually have a broker who's based in Croatia and services the Eastern European market specifically as well. So I think it's important to mention that too. So we have boots on the ground there if you did want an in-person meeting with someone in that area ad hoc. Do we have any other questions? We've got 5 minutes left if anyone does it so. So I can see there's a question about what services are available for buyers. So just getting advice. That means if there is a broker that's managing the listing, then you will be able to get an opinion there. You'll be able to speak to the broker directly. So me, Sebastian, or one of our colleagues. And that's the expert advice that you can get. So I think I touched on it earlier, but you can send a message via the listing and the broker will then see that. And it has a broker managed, and you can see that there's a broker that kind of owns that listing on the page itself. So that's how you would be able to tell. Great question as well. Would the broker not be more seller aligned? So although we want to bring kind of deals to the platform, that's so that we can actually then, I guess, inadvertently service the buyers. I'm trying to bring sellers to the platform to meet my sellers' needs. We're brokers. We are sat in the middle of the deal. We manage the negotiation for the buyer and the seller. We want to get a deal done at the end of the day, but we're trying to get a deal done in the best deal possible for both sides. We do the negotiation there. So we're just trying to make it happen as opposed to being biased one way or another.
I would just add on that as well. I think I mentioned this previously, but our obligation or our alignment is to the integrity of the platform. So yes, of course, we want our sellers to be successful. We want them to secure an exit and get the transaction done. But we need it to be beneficial for both sides. Simply because if we're seen to be one-sided, then the marketplace comes into question, right? If buyers feel they're being taken advantage of, or they feel that this is their interests are not being looked after or met, then they wouldn't come. So we absolutely value buyers as much as we value sellers. Obviously, during the course of a transaction, we index more to the seller, but again, our obligation is very much to the integrity of the marketplace. So we want buyers to feel comfortable. We will never do anything that we feel jeopardizes that trust. The most important thing for us is our community. So we definitely take that responsibility seriously.
And also, we often see that buyers and sellers will transact on the platform multiple times. So once they've done one deal, they're likely to actually come back and transact again. It could be within months, it could be within years. And so that we always want someone to have a positive experience, therefore that's really important. And we work off referrals too. So if we do a good job with a buyer or a seller, then they're likely to refer business to us. And that's certainly something that Sebastian and I see in our books, that we do get referrals through, and then we take on new clients that way as well. And hopefully that can, therefore show you how important it is to us to keep the buyer and the seller happy and be fair in the transaction, and essentially, just as I mentioned, get the deal done and done well. Are there any further questions? We've got a minute left. If there is, I can't see anything coming through on the chat, but if there isn't anything, you have the QR codes there for Flippa account, setting it up, and then also for a meeting with myself and or Sebastian too. If there isn't anything else, then I'd just like to thank you all for joining today. I've been really enjoyed running through everything, and I'll be happy to chat further with anyone if you'd like to book a meeting.
Thank you, guys.
And thank you so much. Have a great day ahead, everyone. Bye.
Ciao.